Steve?
Hello. Hey Scott. Hey Jamie.
Hey. Good
We're doing
afternoon.
we're doing Jamie. You're doing your desktop, right?
I believe so. You should have
Okay.
eyes on.
That's you. I see it.
All right.
I hear you.
Okay.
It's
I think
good.
I'm in the right space. It says Jamie's Trading Studio with Steve. I think we're in the right room.
All right. All
All
right.
right. Excellent. Okay. Once again, welcome to another Thursday edition of the Trading Studio with myself and Mr. Steve Gomez. As always, we want to thank everybody for, taking time out of your busy day to come hear what we have to say. And before we get going here, just a little legal mumbo jumbo. Just want to make sure that everybody is aware that we're a publisher of information here at Trade Ideas. So everything we share with you today, as always, is for educational purposes. So please do not misconstrue what we share with you today as a solicitation to buy or sell anything. Okay, so as always, we're going to stick to our agenda here. Doesn't change a whole lot, but the content does. So, got some interesting things to point out about the overall market. Kind of getting some whiffs of change in the air, as most of you are aware. Got a lot of action from the short side the past couple of days, so we're going to be talking about that. And then, of course, we're going to always focus on the Holly Trinity, which is how do we capitalize on everything, but more importantly, where do we find it, how do we capitalize on it, and put that information into action. And of course, we're going to talk about Holly and her short selling activities today as well. So the horses are on the track. It's time to get going here. Did you catch that 80s reference, Steve?
Yep. Yep. Yep.
Not to
My
date
age.
us yourself, but we look pretty good for guys in our 60s. But anyway, moving right along here. Very, very interesting day in the markets today. So to get rolling, Steve, how about I kind
Yeah.
of blow
Put the
up the
spiders up.
daily on
That'd
the
be
good old
great.
SPY?
Yeah. Yep. Yep. And that wick that we had 2 weeks ago actually pierced right through that downtrend line that I had been showing a lot earlier. I just want to remind people that trend lines are kind of objective and they're not exactly black and white, but for the most part, that sloping trend line that we drew back in April to keep an eye on was barely wicked through, never really closed above that trend line. So, for the most part, that's where the supply that we warned might come back into the market, and sure enough, it did, and here we are. So where do we go from here? Well, there's obviously two scenarios, up or down. We could easily just be pulling back here, trying to create a new base camp with that backfill, and this area could be turning into a future handle on a cup and handle type scenario there. That's the bullish scenario. Pulling back and digging a new base camp here around 205, basically where we are now. Yeah, let's expand that a little bit, and you can see that congestion even going back in last month above the D in the chart there is really defining where the bidders are stepping into this market. And for the most part, the bidders in the last 2 days are kind of even defending that level from even a little bit higher for the most part. That level of congestion has certainly been a difficult level for the sellers to push through and follow through. We've tried a few days now to roll over and go to lows, but only the buyers to pop back in towards the end of the close and have us finish back mid-range. So, if we had seen a big red candle that closed on lows below that orange line, well, then we'd be throwing up even more of a red caution flag. But we could still go either way here, and time will tell. I try not to get too hung up on the big macro stuff, but tomorrow, if you don't know, pre-market, the big pre-market mover is going to be the non-farm payrolls, the unemployment report, which will probably let everybody in the country know there are more bartenders being hired and more manufacturers being laid off. And everybody says that's great because the unemployment rate is right there where it should be, but it's not really telling the true story. That's a story for a different day. But I'm thinking we could see some catalyst action tomorrow, which could pop us in either direction, just depending upon how the market reacts. If we have a really, really bad employment number tomorrow, the market could react accordingly. But accordingly these days means the central bankers are kind of come in and shoot the markets full of heroin and junk again, and everything's all good until the next can needs to be kicked down the road. But I digress. Looking at our footprints in the sand here, it makes all all the sense in the world that the bidders have been stepping in because, like I said, you look at that congestion going back there above the D in the chart, that's kind of to be expected. But maybe the catalyst of non-farm payrolls tomorrow will either kick us up or kick us down and try and give us some market direction. We're going to talk a lot more about it, but you know, the winds feel like they're changing a little bit out there, and we're going to give you some examples why we feel those winds are changing. I talked a little bit about those last night in my webinar, but it's worth repeating for the people that didn't hear that, because it's always really important to try and not get complacent and continue to beat your head against a wall, because buying the dips worked so well since January, February, but no longer doesn't seem to be working well. And as we get into the Holly description, we're going to see that she's showing us under the currents, the tea leaves, that shorting is becoming a bit more profitable than buying, and that's another kind of a caution flag to throw up. So that's you know, that's the market recap in a nutshell. I'm looking for some hopeful movement tomorrow with the non-farms payroll being a catalyst, and we'll see where we go from there.
Right, and the beautiful thing about it, Steve, is that regardless of what the market does, we should be amply prepared, right? Because, hey, here's one scenario that could play out, especially since we're in May leading up to the summer months. Are we going to have that lazy summer, what I like to call the zombie walk through the market? Maybe. I would prefer that because, you know, makes things a little bit more easier to react to. And plus we have Holly, you know, manning the helm as well. So if we did get into, say, a little, you know, inchworm pattern here moving through May, where we just go back to the top and then we come back down and bounce off the bottom, that would be great because, you know, as we've seen, you know, during the run up here, Holly wasn't spitting out a lot of short strategies, and even when she did, they really wouldn't fire that much. But when we look back in retrospect, it was clearly because, you know, it just wasn't conducive. Now we're back at the tops. We're starting to get some of these days, and guess what? We're seeing those short strategies light up, and not only light up, but actually, you know, produce some profits. So, you know, wouldn't be a bad little gig to go down here, run back to the top of the range, Holly does her thing, runs back down to the top of the bottom of the range, or Holly does her thing. Or if we did bust and, you know, all hell did break loose, hey, we're going to be nicely positioned with a bunch of short strategies that should be, you know, finding alpha for us. And, you know, the thing we always like to point out is that the SPY is only up when it's positive. But, you know, in times like this, you know, it's the short sellers that stand to make a whole lot of money, and that's when the gap between us and the S&P can get really wide.
Let's follow up on that and let's give them a visual example. We're not just talking out of our nose here. We can actually see, look at that spider chart right there, and you see the last 15, 20 days have been down. So when we pull up Holly, we actually see a kind of nice improvement, which shows us visually that the performance chart on Holly is actually gaining ground as the market goes down, because, you know, there's equal opportunity buying and selling going on with Miss Holly. She's starting to play the short side a bit more aggressively, and that gives us that look. Look at that, the last, you know, exactly. Holly doesn't care if the market's going down, and in a way, it's, you know, it's probably better for the performance chart, because she's just going to turn right around and follow the odds, follow the statistical roadmap, and just do her thing. And for the people who are really scared about short selling, it's a completely different animal. You know, we understand, and we may have some ideas for you in the future. There are a lot of great inverse ETFs you can buy, so you're still reading the page from left to right, but you're participating on the short side. But, you know, we get it. Shorting is a different animal, but I just wanted to have Jamie show you that map there, because it's exactly what we've been talking about here in the last couple of weeks. Holly's starting to participate more on the short side, which is increasing her P&L as the market starts to roll over, and it's a great graphical demonstration right there.
Yes, sir. All right, so let's go ahead and get into Holly and see what the action was today. It was very interesting, to say the least. So here we have the starting team for today. And before we delve in here, just for the people who may not be familiar with Holly, this was the starting team that Holly selected out of a base camp of strategies that I think is tipping the scales right now at about 45 base strategies. Now, just to give everybody a little insight to those base strategies, these are strategies with huge amounts of trades in them where the statistics still look very favorable. However, the last thing we want to do is put a strategy into Holly that is doing 10,000 trades in a 40-day period. That would just be madness. Nobody would be able to keep up with it. So the strategies that you see appear in Holly's strategy bank for the next session have made the minimum scoring on what we like to call the collective quantitative combine. So 10 strategies made the cut last night after Holly, or actually I should say this morning, because Holly starts doing her work after the market closes. So she's working right now, getting all of today's tick data for every stock loaded into the database. And then when she's done with that, she's going to start re-optimizing every base strategy with today's data and, well, I should say backtesting, optimizing, backtesting, optimizing many times over. Work that if a human were to do it, you'd probably need a team of 100 people, and they might get done before the market opens. So close to 1 million trades are being analyzed, potential trades for the next trading session. So all of these guys made the minimum score. It's not all just about what is the win percentage on the backtest. And of course, we can see the win percentage right here. These are the expectations going into the session based on the backtest. So out of these 10 strategies, we had 6 longs and 4 shorts. And just to clarify here, just because a strategy makes the team for the next day doesn't necessarily mean that it's going to trade. So we can always look over here at the trades today column to see how many trades each strategy produced. So it was very obvious to everybody watching in the real session that bond shorty here was the shining star today. Produced 14 short trades, came in at 57.1% success, actually lower than what was expected, but still managed to crank out close to 3 points on its total for the day. Now we did have some other short strategies fire. This guy only spit out 1, took a 98-cent hit. This guy spit out 1, made a nickel. And of course, it was no surprise to see that the long strategy today that did spit out 4 trades ended up down close to about a point. Now, the one exception here, we did have a long that actually produced 50 cents. So I'm just trying to give everybody an idea of what they're seeing here. And now, what we're going to do is look at the trade blotter for Holly. And by the way, all we have to do to get that panel is right-click and say View All Trades. And now we're seeing all the trades that were produced by Holly today. So let me just expand this a little bit. And whether we start off looking at the winners or the losers, doesn't really matter. I think everybody likes to see the winners first, so that's where we're going to start. Now, the thing to point out here is let's just sort by strategy. And now we can kind of get a glimpse. This is jiving with what we saw in the other panel. The bond shorty strategy was clearly the big winner today. So when we start looking at these guys on the closed and open P&L, if I can get that back up there, obviously the top 3 guys, bond shorty, bond shorty, bond shorty. So let's just start taking a look. And by the way, before we delve in here, let's just take a look at the SPY. And let's try to kind of get in the heads of everybody that might have been watching the markets today. Of course, all of you were. So if we look at the time that the shorts started being triggered here, or let's just look at the very first trade out, we did have a few longs eking through on one of the strategies that starts before the 30-minute mark. So Disc A was one of those, and actually that one made a little bit of money. But as we look at this area right here, when the shorts started coming out was about 30 minutes into the open. So if we just look at this daily chart here, kind of expand it out, 7 o'clock our time is about right here. So everybody's got their trading hat on watching, and they're like, okay, we go down, then we come back up. Hey, we popped highs here. So maybe a lot of people out there were thinking, okay, well, we're breaking up here. Must be time to get long. But look what Holly starts doing. She starts selling into a lot of that strength to get short. Right up in here, where most people are thinking, hey, we're breaking the highs, could be off to the races. Nope, Holly just keeps piling in the longs, boom, boom, boom. Bond shorty keeps firing, and then look what happens. We get that first down push. And of course, everybody is looking at the blotter, and we just keep getting a push down, and we start to see the ebb and the flow of the P&L start to take hold, as we can, see from the chart here. Of course, this looks pretty typical. Most of the time, as Holly starts to initiate her positions, we'll get a little red, or what we call a drawdown period, until the positions start to take hold, and then we can see, whoosh, off to the races. Up pretty strong on mainly a lot of short positions. So let's take a look at some of the entries here. Nice entry. Never really had to worry about HTWR today, because as soon as we got that entry, it was just off to the races, or the opposite races, we could say. Heading south, which is always what we want our short trades to do. So we can see, a couple of longs mixed in there still went up, which is always good. To have longs and shorts on the blotter doing their respective things and making money is always a good sign. But what we can focus on here, because, as everybody is aware, and for those of you who are new, each one of these strategies that was executing trades today is designed around a certain hold time. So we can see this strategy right here holds until 10 minutes before the close, but guess what? It didn't make a trade today. But all of these other ones, including the shorts, were designed around 60-minute holds. So several of these positions, and what we're going to do now is we're going to focus on the non-exit column, which everybody hears us talking about frequently. But, how do we use the non-exit column? Well, it goes about something like this. First off, it's always important to look over here at the exit column and see why Holly was stopped out or took a profit, or, why was the trade exited. Now on this one, we can see that her stop was hit. Pizza was one of the first shorts that was issued, so if we double click here, it was just a little early. Obviously every trade is a winning trade based on when you participated. So this is one of the examples that we always like to point out, that even though Holly got stopped out getting short in this entry bar right here, it still brings up a good opportunity. Had you have even known, or would you have even looked at PZZA if Holly hadn't have gotten stopped out of it? Maybe, maybe not. But we can see 98-cent loser, which was by far and away the biggest loser for the day. But if you're already aware of this stock and you see Holly popping into additional logs, and then simultaneously you're like, wow, the market is rolling over now. Things are starting to go down. You take a look at PZZA, maybe you decided to participate in it, maybe you didn't. But it's one additional opportunity that was thrown out there to you. So, that one was a little steep, a little severe. So what we're going to do here now is target some of the time stops where Holly actually took a loss or a small profit, but then in the end, it was all about the timing. So once again here on the ATRO, 45-cent loser because of the time stopped, and eventually the trade would have went positive. So a lot of the times what we can do here is, if we see Holly taking a loss, we can take that entry price and create a limit alert. If it gets back to that price, this value will reflect 0. So what we can do is just 34.15, once we see Holly get stopped out, we'll just go back and we'll put another price limit alert in at that price. And we can see right here, it would have given us an entry here again, and it wouldn't have worked, and then it would have worked at the very end. So, that one's probably not the most conducive either. But let's take a look at AHS here. This is a perfect example, a little bit easier to follow. So we can see that Holly got time stopped out. Made a good short right here, which, me, you, and the tree looks like a very good entry point. And of course, let's see, that was a 60-minute hold time, so right here, 7.15, 8.15, basically getting out for a small loser of 2 cents. But if we have our trader's hat on, and this stock's just kind of meandering sideways while the rest of the market is getting pulled down, there's really no reason to get out of that trade. So we can just apply some very basic stop loss, management here. And, just because Holly is getting out doesn't necessarily mean that you have to. And I know I sound like a broken record on that, but it's very important to drive that point home. So we can see, yeah, Holly got out, ended up making 24 cents at the close. But if you would have held it, your profit potential would have been a lot greater than that intraday. In the trading session, a lot of these non-exit profits looked a lot juicier than the way they're looking here at the close. Another example of that type of activity is this guy right here, RICE. Now this one was a long. So Holly presented the long right about here. Time stopped out for an 11-cent loser. But we could have always come back in here and set a price limit alert at 17.51, which would have been about right here. So I'm just going to draw a line, and then if we had a price limit alert here, and when it popped back above there, it would have triggered. Obviously, if I set a price limit alert for that right now, it'll auto-trigger because it's already happened. But, just because Holly gets stopped out of a trade doesn't mean that there's not opportunity in that stock, keeping in mind that regardless of whether the trade immediately was a winner or a loser, it's still statistically inclined to go our way. Now, if we miss the timing, we set a limit alert so that we can capitalize on that stock at a later time.
Is this a good time to talk about maybe the 3 different scenarios of how a trade is exited and maybe a couple of ideas on how to deal with them?
Surely, and that's what we're looking at in this column right here.
Yeah, go ahead. Yeah, he sorted that. Jamie sorted that. And the one that's not on there right now is the third component. So we've got 3 components of Holly exiting a trade. You've got your time stop, you've got your stop hit, which is basically another way of saying risk management deployed, okay? And then you've got target hit. Well, there's a few different scenarios for when the trade is active and whether or not you want to participate, because again, remember, the genius of Holly is bringing forth statistical trade entries and good ideas for the day. The exit is not so much. The exit is really more up to you, the discretionary trader. Therefore, we call this a gray box. But the idea generation from Holly is the idea, and that's why we talk a lot about doing trade arounds and putting an alert in like Jamie just did for a possible re-entry, keeping it simple at the exact same trigger price that it originally had. But I want to give you a couple of scenarios here to think about, particularly time stop. Now, look at example VRTX. It's a long. We don't have to resort anything. It's just right there on the, go back to how you had it, yeah. And that VRTX had a 50% profit, but the non-exit profit was $1.40. But it was a time stop. So let's see, you're looking at this chart, which Jamie did a great job of bringing up, building higher highs and higher lows. It's in the money. The only reason Holly's getting out is because that was the designated exit time stop for that particular trade. Remember, she has to get out by the end of the day. That doesn't mean you guys have to get out by the end of the day or essentially at the exact same time. So the theory is, if you got a stock that's working in your direction, the market's still working in your direction, whatever it is that looks like the trade still wants to go, you don't necessarily have to jump ship when she does. What you could do is give yourself maybe a 20-cent wiggle or a little bit of a mental stop that you keep the trade from going negative, but keep the trade alive and keep it open, trying to go for a bit more. And there's many examples throughout the day. Today, not so many, but I've seen many examples throughout the day where, if you just jumped out because the shot clock was going to 0 on the AI channel, you got to really stop and think, is there a reason for me to get out? This stock is on the high of the day. The S&Ps are starting to turn back. I'm using an example, by the way, of a real-time opportunity. But you look around, see what the market's doing. Is the stock on the highs of the day? Is there really a reason for you to get out of this trade when it's winning for you? That's scenario number 1. Scenario number 2 is the exact opposite. If there is a price stop, a stop loss, you're probably better off going along with the risk management that Holly is trying to demonstrate. But like Jamie just demonstrated, you can always get back in just using a simple price alert back at the original trigger point, so you never miss an opportunity. If the trade was a washout and a running of the stops, you took your head away and focused on something else, and you never were alerted to the fact that that was a good call, but it was just a little too volatile and a little too whippy. But you can set those for a possible re-entry in a trade around. The third scenario is the profit target hit. Wouldn't it be wonderful if every one of these hit their profit targets? It would be an awesome thing. But I think what I do and what I recommend considering is on a profit target hit, I've seen a lot of days where we had a really nice profit target and then some of that money was given back. I think a good simple strategy for dealing with those profit targets when they're hit, you know, Holly's taking it off the board with a nice good chunk. Well, once again, you could do a couple things. You could sell half right there and satisfy the great trade, pat you and Holly on the back and say, well done, and then the other half you're still playing with open money. Or you could maybe do the same thing as I said before, just put a trailing stop in just a little bit below. Always try and see if you can maximize and squeeze out more alpha than Holly is taking just because the shot clock's going to zero or because the target's been hit. So just to kind of re-emphasize what I'm saying here, there's only 3 reasons Holly gets out, and 2 of them are often reasons to stop and evaluate whether or not you want to get out with her. If so, go for it. If not, you can always sell half, or you can always put in a trailing stop, but try and squeeze out as much alpha as you can. But then on the stops hit, I recommend that you follow to the example that she's setting for risk management, because more often than not, we've seen a lot of these trades that go stopped out. When you look at the non-exit profit, they continue to bleed lower and lower and lower. So we really are very proud of the example that Holly sets as the stops are hit and the risk is managed. And I tried to touch on it last night, and Dan does it a lot. When you golf with a really good scratch golfer in your group, you can't help but pick up a few tips here and there and get a little better yourself watching how the efficient pro makes his way around the course. And that's what we're telling you that Holly is. She's an efficient pro making her way around the market with with zero emotion whatsoever. So there's some good tidbits you can pick up in risk management. I'm pounding the table. Risk management is one of the best tips you can get from Holly on how to manage your risk. And I'm done with that.
Yeah, and what is Holly, if you really had to distill it down, what is Holly's strongest attribute? And that would have to be her entries, her statistically weighted entries. And I was even having a conversation with a pretty astute trader earlier in the day who's been, Steve, probably in the game about as long as we have, maybe a few years shy. And he's like, you know what, I've been in the game for a long time, but I know my weak point are my entries. And we were discussing, okay, that's Holly's strong suit. Holly's strong suit is her entry and her ability to crunch data on a massive level. So, it's it's a perfect match for a human to be interacting with Holly on a gray box capacity, because Holly can't see patterns and make decisions on the fly. She does all of her heavy lifting and work. It's like that old saying, Steve, all the work's already been done when the trading session starts. All the homework should have been done already. Well, that's the way Holly does. Everything's been done before the market opens, so all she does is react, right? And the entries that she produces are really the strong suit. And the nice thing about it is if it goes right away and you're in it, beautiful. If she gets stopped out, that brings something interesting to your attention. You're like, hey, I see Holly got stopped out, but now I'm looking at the daily. It's buttoned right up to yesterday's low. The volume's dried up on it. It looks like a great entry. And bottom line, the risk is so small, why not take the trade? So, as we always like to say, she goes before you. Sometimes she gets you right into a great trade. Sometimes she steps on a landmine for you, and then you can capitalize on that. Just like the old trader adage, sitting next to the guy, capitalizing off of his pain. Well, that's what Holly does. She's there with you every day, trading with perfect statistical probability.
Yes, sir.
So, we try to make it easy for people to focus on the most important aspect, which is getting into the trade. Nobody wants to get into a trade and immediately be down 50 cents, right? But if Holly does that, you can still check it out and potentially capitalize and have a better entry than she had. Okay, so let's see if there's any other. Did we miss any of these other ones here? Let me just see, because part of the game here too is being able to see on the loser side. You know, obviously this one stands out, but a lot of the times we get to see that the stop losses are doing their job. 25, if you would have stayed in, you would have lost more. You know, 7-cent loser, had you stayed in, you would have lost 83 cents. So it's twofold. Yes, the stop losses are doing their job and presenting you with trade around opportunities.
And then again, just to keep it simple, use the initial entry price that was stopped out the first time, because that's the area that made sense the first time. Don't try and make it difficult. Let's just keep it simple. If you decide that you might be interested in that on a rebound, pop it in there at the entry price and then let that move on. I'm talking with somebody on the back channel here who's a new trader and trying to get some advice as to how to make the learning curve as quick and cheap as possible. And I can't emphasize enough, Mike, the price alerts function. This price alert tool that we've come out with allows you to track, and Jamie cleared his out for May. I cleared mine out for May and started adding some more last night. But the price alerts, this is the window where when you set something to keep an eye on and have it trigger and come to you in real time, this is where you start to get feedback and see on that upper left window, since triggered, it says 0.00. But Jamie's April price alerts were up, I don't know, 50, 60, 70 bucks. I can't remember. But the point being is it shows you that wherever you're setting your triggers, whatever your method is that you're trying to track here, that P&L is going to give you good feedback as to whether or not you're on the right track and you're seeing things. If you're chasing stocks after 3 or 4 days up move and then you're buying them at that point at the top and these things are reversing on you, well, that P&L is going to show you real quickly how poorly your method is on a paper trading, not a real actual money trading loss scenario. So again, the price alerts are great for a lot of things. They're great for sharing some great strategies that we can share and collaborate. But for the newer trader, when I train some of the newer traders, I try and spend as much time as possible on this price alert page to show them once you start populating it and once these things start triggering, you're getting instant feedback on whether or not your eye has a good eye for the right type of entry. So I can't stress that enough for the new traders to consider the price alerts as a very good teaching tool, in addition to sitting next to Holly and watching her and letting some of her good habits and non-emotional ideas rub off on you.
Yeah, so Steve, let's engage in the Holly Trinity and actually look at some of these charts and setups that we're going to get from our lists, and then we'll put them into this price limit alert window, and we'll go ahead and spray those out to the audience at the end if we can pick some good ones here. And let's just do that. So we'll push Holly to the side for the day, and just everybody, a nice 1.5 points on a decent trade count. And of course, yesterday one of the short strategies carried all the water yesterday. So we're starting, it's been a while since we've seen that type of activity. Are we going to go red, 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 green, 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 red, 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 green, green, green on the market? That's fine. If we get into that little inchworm pattern that we were kind of throwing around earlier, if we do get range bound here on this daily, it might not necessarily be a bad thing for the type of trading that we're keeping our eyes on. Lots of opportunity is the bottom line, lots of volatility. So, as all of you are aware, we've been getting a lot of our limit alerts to the upside from the trend change lubricant list, which you see here. But Steve and I have been discovering, and of course this has not been present up until now, but we're starting to see some of the inverse patterns present themselves. So what we've done here is we've taken the trend change lubricant and we've simply flipped it and created the inverse. Now there's not a whole lot of things on here yet. Matter of fact, there's not a whole lot on the original trend change lubricant, because as we've capitulated up here to the top and kind of getting a little range established here, there have been fewer and fewer of these types of setups occurring on the daily. So just to kind of refresh everybody's memory on the types of patterns that we're looking for, which, hey Steve, I just pulled up this HIFR here, and it looks pretty,
pretty old school.
pretty much like the animal that we've been tracking, We can see that it popped its head above just today. You know, got a little bit of push through. What's going to happen tomorrow, nobody knows. But these patterns right here should look very familiar. And a lot of these will have already went. But now we're starting to see some of these guys set up on the downside. So here we see pretty much the exact inverse type of a pattern. And, you know, go ahead, Steve.
Well, yeah, I just wanted to jump in because people were asking us over the last few weeks, well, why wouldn't you just take this trend change lubricant so good? Why wouldn't you just take this and flip it upside down and start shorting it? Well, the answer was yes, but it wasn't quite ready yet. You know, starting last week, late last week, that trend change lubricant factor, the green window, was just loaded. You could stretch that page the entire length of the screen and you still had to use a scroll bar. There were a lot of setups in there. So one of the reasons we're talking about the winds of change is not only that Holly's starting to participate more on the downside, but this particular alert top list that we've been using for a few months now has just been so full of opportunities. All of a sudden, the page is shrinking down, and at times during the day, there's only 2 or 3 that are coming through there, whereas the flipped one is now starting to get a little bit more populated. So, you know, the answer was yes, it always was a good idea to flip this chart and have it, but the backdrop of the market wasn't quite ready, I think, for it. So now we're bringing it up and we're showing how to use the flipped simplicity of it, but as a backdrop to the market, which we've seen the last couple of weeks here in the selling, this is a strategy that might become more useful than it was a month ago when you guys were asking about it.
Right, and we might find ourselves in a market where both things are happening simultaneously. You know, obviously the SPY is the head of the snake. You know, it moves up. There's a lot of stocks in the body that have to catch up. So, you know, when we're at the top here, there could be a lot of stocks at the bottom trying to play catch up, exhibiting these types of patterns still. But now, whereas none of these were showing up in the past, they're starting to show up, which tells us a certain amount of stocks are getting up to their upper ranges. So there might be a little bit, you know, which kind of makes sense now if we're looking at the SPY on the daily. We might go sideways and undulate here while the rest of the stocks catch up, you know. So Steve and I were talking about this one earlier. It's already punched through. Just like if we were looking at this guy, we wouldn't really want to chase this. You know, you see this little guy, even though it's not a very steep incline leading up to the penetration here. But how many up days in a row? 1, 2, 3, 4. Rocking 4 up days in a row. There's always a pretty good chance that if we chase this high up here and try to use these guys as our stop loss, Steve, we all know what happens on the opening 30 minutes with more frequency here lately.
That's the come out roll.
Right, right. So if you don't hit 7 or 11, you know,
describe the come out roll.
You pop a number and have to wait for your point to get rolled. There's a pretty good chance you're going to get a 7 before then, and the 7 in this case is a jerk down and your stop loss hit, right? So if we were wanting to actually participate in this one, and we did not want to be the sucker buying the top, not that that might not be a good price, but we have to exercise risk management. So putting our stop loss down here is what everybody will do because that just looks safe. You know, if I draw a line here, a lot of people are like, yeah, I'm going to make them wiggle it down to here to get me out. Well, guess what? Happens more than you think. You know, if I was actually trying to buy this and not get wiggled out, you know, if you wanted to be on the safe side, you'd probably have to go below this wick, and then you're risking too much, right? So to alleviate that condition, it might be better just to set a pullback alert here. Now, Steve, if we're looking at this and thinking that we'd be safe on a stop loss, we should really flip that and be more or less a contrarian and say we'd like to get our fill down here, right?
Mm-hmm.
All right, so looking at the range of this candle, 1641, probably 1642 would be a really good price to try to get long that stock on a pullback. So 1642. Now keep in mind, we're still going long, so we have to leave it just like it is. Price of HIFR falls to 1642. We want to get long, and we're going to call this pullback fill. And always use a note, because as Steve and I always like to talk about, when you're doing this, the market is closed. you're rational, you're sane, you're not fixating on every tick in the market and, getting into that mode, which we all, everybody knows what I'm talking about here. This is rational Steve and rational Jamie going, okay, this is my plan, so that when these things trigger, we can reference our notes and, be more
That
of a, in a
especially
zen state.
that especially comes in handy like when you have stock that has a big short float to remind you that the short float percentage might be X percentage. Anything that you can do to your future self with current notes to try and jog your memory as to why you liked that in a nice zen-like emotional state is certainly a benefit to you.
Right, so let's just go ahead and, let's do some longs and some shorts here. Now, on the WMB, very similar type action. Popped ahead here, poking its head up again. Now, I don't know, Steve. This one, I would have never expected to see this this big green bar here today, but that's what happened. So, whereas we were looking at this little time frame earlier, and this is a good time to show everybody, if you want to change something on your chart, whether it's a regular line or a price limit alert, what we do is we want to make sure that we're not using our crosshairs, which I'm not, and we can latch onto this guy and we can simply move him around. If it's a price limit alert as opposed to just a horizontal line here, it will actually change your price in the limit alert window, so you don't have to go through there and do it manually.
I actually like the way you drew the line there. Look back where the W is. You caught the low end of that tick on the chart. And then you caught the high end of those little wicks and congestions under the M, so there's your pivot point. That is what we want to use for our triggers, is find these pivot points. Look left, see what's going on over there. And as you can see, a nice green bar, but came just shy of closing above there. So that line that was created right there, in my mind, would be a good, decent a breakout alert for our price alerts. But we just got to double check real quick here. Let's look at your single stock window. When are the earnings? We've got to remind ourselves we are in the throngs of earnings.
Right.
Earnings date 0.25, so earnings are behind us. Good.
Correct.
All clear. Correct. That's the kind of thing you would put in your notes. Okay, price alert, break above, earnings are behind us, short float is what? No, nothing really to write home, only 3%, so short float is not a factor. But, going through this exercise here is what we call the Holly Trinity, playing off the name of Holly. There is no Holy Grail, but there is Holly. And to just keep things simple, the three tools of our alerts, our charts, which are our footprints in the sands, where we can identify pivot levels that make sense, and then our price alerts, which give us excellent feedback on how our methodology is working down the road.
Yes, indeed. And just to recap what the Trinity is, we find the action with our with our alert windows, top list, and Holly. We look at the footprints on the sand, which are the charts, and then we put that potential energy into our limit alerts, and eventually it becomes kinetic when those things trigger. So once again, the beauty is in the simplicity. And, simplicity is a huge factor in keeping your mind nice and free and clear during the trading days. The less decisions you have to make during the trading day, the better off you're going to be. And you just become methodical and robot-like during the trading day and save all the emotion for after the market. All right, so let's move right along here. Let's go check out. I'm itching to look at these because they just haven't been around for so long. So, MOD. Now, this is the exact opposite, of course. Now we're going to be looking for what a pullback fill will be in this world is a lot different than the other world. So we see the penetration that has occurred here. Wouldn't want to go chasing it here, because if we try to put some stops in right along here, or what we thought would be a good stop loss, that's where the jerk out occurs in that first opening 30 minutes a lot of the times. So, Steve, if I shorted right in here and I was still short and I was thinking to myself, what would a good stop loss be here? I'll probably make them jerk it back above these candles here. So, probably, would you say the bottoms of these candles would be a good backfill?
I would say the bottom of that first go, pause, go candle, which you've heard me say before, go and then a pause, doji the following day, and then a go again. So that little quick micro move may have expended itself, but it doesn't mean that it can't reset up for another possible move. So I'm thinking, the bottom of that first red candle, just above that doji is where I would probably be setting my stop loss if I was short the stock and didn't want it to go against me.
Right, which would be about 1045.
And we got to recode it as a short.
Yep, if the price of Mosey rises to 1045, we want to get short.
So just like all the pullback alerts we were doing to the upside, this is a bounce fade, we can call it, a bounce fade alert. You're fading the bounce rather than buying the pullback.
And we can see our line right there. And if we ever wanted to adjust that, we could just, so my price currently on the MOD, 1045. Just watch this little field here as I move this around. As I move that, it changes the price too. So, you can just move everything around on the chart and not have to worry about going back and, let's see, 1045. Hold on, I got, there we go. Okay, so now we're back at 1045. Actually 1043. Boy, my sausage fingers are getting in the way today. There we go. Oh well, we're a penny off, but you get the gist of it.
You can always go in and adjust.
All right, and of course we're just kind of looking at these for the very first time to kind of share with you guys, the methodology to the madness here. Of course, none of these really,
go, pause, go.
That
one might be interesting. That one might be interesting if it can make a new low after today, bounce, check, and now it's trying to make a new low there. That one might not be bad to just do a breakdown alert.
Right,
You just don't want to chase too many red bars to the downside, just like you don't want to chase too many green bars to the upside. But that doesn't mean that we can't look for good setup 2.0 and try and bring it to our attention. Whether or not we take the trade in real time is up to us, but we're just trying to keep things simple and serve ourselves up some opportunities throughout each day rather than chasing our tail with all the blinking lights and pretty colors and 4 symbols.
Right, so on this one we could go a couple of different ways. Looking at the way this stock behaves, when I see this and it goes bzz, and then this and then bzz, and this, it's making me think there's going to be a bzz before the move happens. I might be wrong. So, a lot of cases, and in a lot of cases like this, we can just do an old bracket, right? So we could just pick 25 here and go, okay, if the price rises, we want to get short, 25 bucks. Oh, did I just do an autofill? Yeah. Whoops. Let me get rid of that one. Okay, so obviously it closed, where did the stock close today? 24.19. So if it goes back to 25, did I make an error there? If it rises.
Is it trading after hours?
Yeah, that's a good question.
That could be it, because that happened to me once during a demonstration.
Yeah, let's look at the, I've got post-market checked.
Well, you got to go
daily,
to
but we got to go, yeah, hey, helps if you look at the right, okay, so what is that little volume 2000 and then up here?
Ah,
that little bitty tick, that's what's screwing it up. So if you're ever doing this, this is a good example. If you ever set a limit and you're like, what? Why did it auto-trigger? Go check the post-market, because look, why is it gapping up there? I don't know. It's only traded 200 shares up there, but that's probably because the spread opened up, right?
Mm-hmm.
But the bottom line is, I think everybody can see what we're trying to accomplish here. If I wanted to really push this, I could take the low of this bar for a continuation and say, if it falls to 23.78.
What's interesting I've noticed about this is it only does that when you're trying to set the alert, when it double checks that aftermarket. It's not going to go off just because it's trading aftermarket. It won't trigger until again tomorrow. But for some reason, trying to set the initial alert, it seems to look at an aftermarket print. I'm gonna suggest maybe we look at that.
Okay, so now we've got one set up at the bottom of that wick. If it continues, we're going to go ahead and take the short. And then, assuming the alert wasn't auto-triggering, we could have another one up here for a bracket. Whether it pulls back first, we get the better fill, or whether it continues, we've got our bases covered if we don't want to miss that trade. All right, well, let's, I tell you what, I just looked at the time. I'm like, wow, are we in a time warp or what? But there was somebody asking questions about a penny stock configuration earlier.
I believe that was Mike earlier. Let's see, back towards the top. Could you share any useful pertinent filters and or alerts for sniffing out penny stocks besides the standard price filter?
Well, I guess that really depends on what you want those penny stocks to smell like, right? The thing with penny stocks, they all look great on the chart. Now, when you pull them up, and you can't see everything in that chart. So a lot of the problems with the penny stock are super huge spreads. So, if you don't care about large spreads, then, there's a lot of different ways that we can show you penny stocks. The easiest example would be to, for example, if, whoops, load from cloud. Let's say we pull up volume radar real quick. And let's say we dispensed with all of these min-max filterings because, minimum daily volume of 500,000 isn't going to pull up a whole lot of penny stocks, right? So we'll get rid of that. Now we would have to add, for this type of stuff, if you do want to avoid the large spreads, we could start perusing it something like this. Of course, I have to change my market center here. So let's just say we look at the OTCBB, which is just one notch above the pink sheets, even though they're both the wild, wild west. And of course, look what I'm discovering is that that filter doesn't appear to work. That information is not being, that's not surprising because these markets are a lot different in the type of data that they show. So see, we're not even getting the spread for the pinks or the counter market for the bulletin board. So I was going to say this would be a great way to monitor the spreads and figure out which ones are tradable, but we just discovered something here, and that is not possible with that type of market.
Can you do me a favor? A couple of people are asking for the price alerts. As we talked about, these are shareable, and we'll go ahead and he will demonstrate how to grab the 4 or the 3. Yeah, those should all work. I mean,
right. I mean, and basically, ladies and gentlemen, this is just to show you the functionality. That way, if you don't have any alerts in there, you can pop some in, and if you already have some, you can add these to your.
No, you just don't. No, don't delete. Don't delete. Gotcha.
Oh goodness, it's been a long one, Steve, today.
Yeah.
Okay, so share, not delete, and now let me just pop this into the chat area. All right, so that cloud link is in there. And just to refresh everybody's memory, a lot of the times when we send out cloud links for top list and alert windows, boom, the window pops up for you. In this case, it's just going to add them to your price alert window. It's not necessarily going to snap the window, but they will be in there.
Yeah, there's no trumpet fanfare. You just got to pull them back up, and they'll sneak their way in there.
Right, and everybody always needs to have the created column and the triggered column. That way you can see, okay, I created this alert way back here. When it triggers, boom, you'll see the triggered column as well. And more importantly, what's happened since the trigger will track your P&L moving forward.
Guess who lives near Miramar Air Force Base?
I can hear that. I can hear that.
That's Top Gun going nutso right now.
Okay, well, am I missing anything? Any pertinent questions over here that we failed to answer, Steve? Or
well, Mike was asking about showing the compare count window, and we're bumping up at the top of the hour. That one probably requires a bit more explanation than just a minute, don't you think?
It does, but I tell you what, we'll make sure and talk about compare count on Monday.
Third, on Monday. Yeah, that's what I was going to say. We'll go ahead and make a note here on our scratch pads that Monday content, we're going to spend some time on the compare count window, Mike. So if you missed the Monday, you can also catch the Monday video recap, which will be on the YouTube channel.
Right, and with the market trying to, with the market being a little schizophrenic up here, those compare count windows can really play a big, make a big difference in us as traders really understanding where the bias is, and just to dangle a carrot out there. A lot of the times in the summer months when the market gaps down a half a point and goes sideways all day, you have the illusion of selling, but really where the party is, it's just a big buying frenzy. And we're going to show you how to detect that come Monday.
All right.
All right. Well, Scott, if you're hanging out in the wings, I think it's showtime for you. So let me get your slides pulled over here, and you can tell everybody how they can benefit from the coupon codes that you've created for them.
Yeah, let's start with, I think it's slide number 4 there. So we've got some things coming up. First, I'll talk about the our current pricing, because we have some changes coming up either at the end of this month or at the beginning of June, depending on when some development tidying up and housekeeping is done. So currently and through until those changes, we are keeping the same pricing schedule, which is based on our subscription model, $99 a month or $888 per year. Obviously, the $888 saves you a bundle over the $99 a month. So it includes all of your real-time data, your charting, and a really great full hour of one-on-one training. As soon as you get a subscription, go to the support section, click on the training, select your preferred time and date. We'll get that going for you. And of course, there's no contract, cancel at any time. Now, to get access to the permissions that enable the AI Holly, price alerts, and the oddsmaker backtesting tool, that requires purchase of a one-time $1,100 license that lets you find those trades in the market now using the AI and the oddsmaker. You can optimize your strategies with no programming, and you're going to get access for life. All you need to go along with that is a subscription. They go together. Now, what we're doing coming up soon, and it's either, again, at the end of this month or beginning of June, is, if you go to the next slide there, just to give you all a heads up, we're doing away with the lifetime purchase for the AI and oddsmaker, and we're just making it subscription-based. So we're going to regular trade ideas and trade ideas premium. So TI Core, same, $99 a month or $888 a year, and then access to the AI and the oddsmaker, and the price alerts comes at $188 per month or $1888 per year. Obviously, right now, if you buy that lifetime license and then get renewed at $888 a year, you're going to spend $1988 once, and then renews at $888 ongoing. You're grandfathered in at keeping the $1,100 lifetime for the high-level functionality and the new stuff that will be coming out. So before we make this change would be the best time to come on board and get the AI and the oddsmaker. Want to give everyone a heads up of that. With that, existing subscribers, like if you decide not, if you already have a subscription and you're not doing this upgrade before then, it's okay, you're grandfathered in. If you decide to purchase and you've already had a subscription before we do the price change, you'll still be able to purchase the $1,100 one-time lifetime license. But new people coming on board after that point, after the end of May or beginning of June, they're just going to have these choices of $99, $888, or $188, or $1888. It makes it much more simple. Moving forward, after we do the switch, it'll be easier for people to understand the pricing tiers instead of having that one-time purchase. However, it is, if you do want to get the AI, it's going to be in your best interest, and it's going to be cheaper for you to keep it long-term if you do it before we roll this changeover. So to thank you all for showing up, I want to direct your attention to the handouts panel on your GoToWebinar presentation interface. And there's a PDF right there for you to download. Go ahead and grab that. And the next slide also has the same information. We have a product code that's good through the end of Friday, and that's Holly4. It's all caps, H-O-L-L-Y. It is case sensitive. And that takes half off your first year, 20% off, half off your first month. So try us at $49, take the training, renews at $99 ongoing. Get a year for $710, it's 20% off, and then renews at $888, or get that lifetime AI oddsmaker license for just $770 lifetime. Now, a really great thing that we've done to make it easy is we have a combo page, and you can just get there by using that bit.ly link or click through on the PDF, bit.ly/ and then just like you see it, all capitals, AI Holly, it has to be all caps for that part, and that takes you to a page where you can click through the combination of lifetime odds maker for 1100 and the year for 888, which is 1988, and that product code Holly4 takes $508 off immediately. So you get everything for 1480 for your first year, including the odds maker, AI, and the year, and then you renew at 888 and you keep the AI and the odds maker. So this is the best thing moving forward until the end of May or June, and we're going to keep reminding you about that because we are making this change and we want to give everyone an opportunity to take advantage of the pricing before that happens. If you have any, and if you're upgrading from your monthly, just shoot us an email after you do this. So purchase the 1480 and then send us an email letting us know that you also had a monthly subscription, just so we can check on that and make sure all of the subscription plumbing work correctly and you won't get double billed. And if you do see that, just email us. We'll fix it. Not a problem. If you have any questions at all, email us info@trade-ideas.com and we'll be happy to help you out. That's the best way to get a hold of us. Thank you everyone for attending. We'll have a recording of this up later tonight or tomorrow morning, and you should get an email with a reminder that we have the recording up and a link to the playlist to find it in. Thanks everyone. Thanks Steve. Thanks Jamie.
All right, see you Monday.
Thank you.
Yep.
Bye-bye.
Cheers guys. Bye.